Hello, Nataraja here. I am back for the monthly top 50 mutual funds analysis. This is for the week ending on October 25th. So let me proceed with the presentation. October 25th is the last Friday. I am doing this on a Wednesday morning. So we already had two trading sessions which are looking up for equities, especially Bank Nifty related. So there is a bit of a good news, but however, this report is as on last Friday, and last week was pretty bad for equities in the market, and that gets reflected in the mutual fund report. The one in the top belongs to last week, and one below is the week before that. So if you do a comparison, let us look at the overall equity mutual funds, 929 equity funds. Their weekly average was minus 3.99%. So we lost almost 4% on average, which was much higher than a week before. Monthly loss is at 6.38%. A week before it was mellow. So 3 months return also went into negative, and it used to be 2.68 a week back. 6 months return is 10.9, reduced from 18.19, and 1 year return is improved to 38.98, actually reduced, sorry, from 39.8. So it's a bad week. So let us look at weekly top 50. Weekly top 50 somehow managed to have a positive return, but not as much a week before. Monthly top 50 had had a 3.12% return for the month compared to 6.33% a week back, and annual top 50 annual return is 62.26, much reduced compared to 65.36. So this is the summary of equity funds. So now let us look at the top 50 funds within equity. This is the weekly top 50. If you look at this list, the ones that are in green are those that have above average return within the list for all timelines from 1 week to 1 year. And the yellow ones are those with the above average return in all timelines except for any one. There again, a slight relaxation of the rule is between 1 week and 1 month, even if any one is above average, both are considered above average because it's short term. So some relaxation for the short term. Now, the bad news is that those which are colored here, whether it's green or yellow, do not belong to Indian equities. They're all foreign equities. So though the list has Indian equities, they did not get any color. And the nearest Indian equity that is on the top probably is Nippon India ETF Nifty IT. Even that had a negative return, and annual return shows to 39.62. So that is the top weekly top 50 list. Looking at monthly top 50 list, again most of them on the top are belonging to equities abroad. The nearest one that belongs to Indian equity but not getting any color is I'm looking at it, I'm coming down, and still it's all about NASDAQ, etc. Okay. ICICI Prudential Strategic Metal and Energy Equity FOF having some positive return for the week and the month, but a lagger anyway. So nothing much to talk about here. So next we are looking at equity annual top 50. The one in green are Motilal Oswal Mid Cap Fund, but negative for the week and the month. Invesco India Focused Fund, negative for the week and month. Motilal Oswal ELSS Tax Saver Fund, negative for the week and the month. So all green, other ones are HDFC Pharma and Healthcare Fund, LICMF Healthcare Fund. They're all negative for the week and the month, but they're above average. So because the average itself is negative. So nothing much to talk about again. Let us now look at the bottom 50 list, the weekly bottom 50 and monthly bottom 50 are used to sense bearish reversal, meaning that potentially those mutual funds may further correct in the weeks ahead. And here the ones which are marked are either in dark red or a lighter red. The one in dark red are those with below average return for the week and also the month, but above average annual return. So if the annual return is not there, it is considered above average automatically. The one which are in lighter red are those which have below average either for the week or the month, and again above average for the annual return. So the one in deeper red are Motilal Oswal Nifty India Defense Index Fund, the same ETF format. So the defense funds are negative here. Aditya Birla Sun Life Nifty India Defense Index Fund. Then some enhanced value ETF, Motilal Oswal, Mirae Asset, 250 Moment Quality ETF, Mirae Asset Nifty Small Cap 250 Moment Quality 100 ETF, Bandhan Nifty Alpha 50 Index Fund. So these are all, and also Kotak Nifty Alpha 50. These are all in dark red. The one in light red are Grow Nifty India Defense ETF, Grow Nifty India Defense ETF, FOF, HDFC Defense Fund, UNESCO India Small Cap Fund, Kotak BSE, PSU Index Fund. So the same old story. The traditional leaders are struggling here. The monthly bottom 50, the one in dark red are Tata Nifty Realty Index Fund, Motilal Oswal Nifty Realty ETF, HDFC Nifty Realty Index Fund, ICICI Prudential Nifty Oil and Gas ETF, Bandhan Nifty Alpha 50 Index Fund, and the one in light are SBI Automotive Opportunities, Nippon India Nifty Auto. So autos are all caught in bearish reversal here. So watch out. Transportation Logistics Fund that belongs to UTI, Quant Business Cycle Fund, Kotak Nifty Alpha 50 ETF, even some consumption funds like Kotak Consumption Fund. So they're all showing, bearish reversals. So watch out. Now the annual bottom 50 is used for sensing bullish reversal, and that is done by marking those which are having above average return both in weekly and monthly basis in gray, and they are Mirae Asset Global Electric and Autonomous Vehicles ETFs. This is again global in nature. UNESCO India, UNESCO Pan European Equity outside India, ICICI Prudential Strategic Metal and Energy Equity FOF, Axis Greater China Equity FOF, ICICI Prudential Global Stable Equity Fund. Nothing specific here which is worth for the Indian context. So again, bad news here. Still some bank ETFs are still stuck here. So that is the story about equity, not very impressive week at all. Coming to hybrid is the same old story because the hybrid funds are having a good portion of equity, and such funds have corrected significantly. So 217 funds, weekly return minus 1.47, monthly return minus 2.63, much higher than the week before. And the top 50 also is having subdued return. So we show only monthly top 50 for the hybrid funds. And because of the equity corrections, most of the top 50 funds are non-equity based hybrid funds like arbitrage fund, the ones which usually give lesser return are in the top of the list, which is not a good news for equity based hybrid funds. Nothing worthy of mentioning here. White Oak Capital Arbitrage Fund, again, there are none in green here, and the one that I have are yellow, do not have better returns for the short term. So you kind of have stuck. The only one with the positive return among the amber one is White Oak Capital Arbitrage Fund. Again, it's a non-equity based, you could say, in terms of returns range. Next comes the debt funds. See, debt funds again, 492 funds. The weekly return is 0.06 less than last week. Monthly return 0.42 less than previous week. 3 months return less than previous week. and 6 months return is same, and annual return is bit less. So debt funds are also receding a bit. Again, monthly top 50 among debt funds, there are two in green. Aditya Birla Sun Life Credit Risk Fund with 13.11% return for the year. Bharat Bond ETF FIF April 2032 target 10.70. And then there are some yellow ones which are medium-term plan for Aditya Birla Sun Life, another Bharat Bond ETF, Kotak CRISIL IBA, AAA Financial Service Index, Kotak Floating Rate Fund, etc. Finally, we are coming to commodity funds. This is where some good news is there, because we had a bullish week for commodity funds. There are 57 funds. They had 1.81% return for the week, but bit subdued compared to a week before, 2.45. Monthly return 4.14, subdued compared to 5.4 before. 3 month return is pretty good, 13.66 compared to 2.26 a week before. 6 months return also looking good, and annual return also looking close to 30%. So imagine 30% return is like commodity like return. So the top 50, there are definite leadership this time. Many are in green and 2 are in amber. The best annual return is Aditya Birla Sun Life Silver ETF FO 33.62. And most of these are above 30% only. Now, so it is quite encouraging to consider commodity funds for short term based on this. But the commodities are very volatile. And after the US for presidential race results by November 5th, there can be some impact for commodities. The war situation, if it breaks out, it will hype up commodities. So it is volatile. So if these prices are at the top, entering now could be a negative one. So, but from a long-term perspective, commodity funds have given better than fixed deposit. And short-term, this kind of perkups add to it. So I do not consider commodities still as a replacement for equity at this stage. So that brings to the end of this bulletin. Standard disclaimers. This is neither a solicitation nor a recommendation for any investment in mutual funds. You need to do your own research and understanding, because there are market risks in such investments. So you can follow me both on blog at Nats Fun Corner or the video like this on various platforms given here. So with that, we are coming to the end of this bulletin. See you soon. And very soon, there is another bulletin coming, which is the special mutual fund report, detailed debt fund analysis done as per the, as on last Friday, October 25th. You can anticipate that the blog is already out. So thank you very much. See you again.